Hi, Bioeconomy friends. Last week in crypto felt like a crossover episode between tech, finance, and politics. A DeFi platform decided to open a lobbying shop in Washington. Regulators gave the green light to round-the-clock trading. Celebrities mingled with bankers at Mar-a-Lago Crypto Summit, and a long-stalled market structure bill finally looks poised for action. Meanwhile, the Fed reminded everyone that higher rates are still a possibility. Let's break down what happened between February 17th and 23rd and what it means for the market. To set the stage, the majors traded in a tight range. Bitcoin hovered around $66,000, Ethereum just under $2,000, Solana just under $81, and XRP about $1.40. With volatility muted, investors had time to digest this mix of policy moves and industry developments. Now the highlights. Hyperliquid launches a DeFi lobby. Hyperliquid, a Layer 1 blockchain and perpetual futures exchange, announced the Hyperliquid Policy Center in Washington, D.C. Hyperliquid's goal is to push for a regulated path for DeFi, especially perpetual derivatives and blockchain-based financial infrastructure within U.S. law. To fund the effort, the Hyper Foundation will contribute 1 million HYPE token. This move signals that sophisticated DeFi projects now see lobbying as essential to their long-term success. CME plans round-the-clock crypto trading. On the market infrastructure front, CME Group said it will launch 24/7 trading for its crypto futures and options on May 29, pending regulatory approval. Contracts will trade continuously on CME Globex with only a 2-hour weekend maintenance window. All weekend trades will settle and be reported the next business day. And CME noted that average daily volumes for its crypto products are up 46% year over year. The announcement follows joint statements from the SEC and CFTC exploring a shift to 24/7 capital markets. As Nasdaq and NYSE prepare similar expansions, CME's move underscores how mainstream exchanges are aligning with crypto's always-on nature and could pressure others to follow. Inside Trump's Mar-a-Lago Crypto Summit. In a headline that sounded like satire but wasn't, World Liberty Financial, a company in which the Trump family holds a 38% stake, hosted a crypto summit at Mar-a-Lago. The event united traditional finance leaders like Goldman Sachs CEO David Solomon and Binance founder CZ to discuss tokenization and stablecoins. World Liberty announced partnerships with Apex Group and Securitize to tokenize real-world assets, hoping to expand use of its USD1 stablecoin in corporate finance and remittances. The long-awaited Digital Asset Market Clarity Act gained new momentum when Ripple CEO Brad Garlinghouse told Fox Business he sees a 90% chance of the bill passing by the end of April. The bill passed the House with a bipartisan majority in July 2025, but stalled over jurisdictional disputes. He also noted that corporate treasurers are increasingly interested in stablecoins, but need federal guardrails. Prediction markets still peg the bill's chances around 78%, but if passed, it could remove legal uncertainty and unlock institutional capital. Fed minutes point to potential rate hikes. Minutes from the Federal Open Market Committee's January meeting revealed that some policymakers support upward adjustments to interest rates if inflation remains above target. The Fed kept rates steady at 3.5-3.75%, but this hawkish language is notable given recent rate cuts. Futures markets still assign a 94% probability that rates will stay unchanged at the March meeting. Last week's stories highlight how deeply interconnected crypto has become with policy and mainstream finance. Hyperliquid's lobbying effort acknowledges that navigating Washington is now a core competency for DeFi protocol. CME's move to 24/7 trading brings legacy markets closer to crypto's always-on ethos. The Mar-a-Lago Summit signals that tokenization and stablecoins have moved from fringe to front-row topics, albeit with political baggage. And both the Clarity Act momentum and the Fed's hawkish minutes remind us that macro and regulatory developments remain key drivers. Thank you for watching. I'll see you next week.